Much. Let's get to Ozan Ozkarel, who is the co-founder and managing partner at Tanto Capital. You know the area very well, and the question I just asked Dan was one about how we think about the conflict evolving from here, given those nations so close to the action now being targeted. Nobody necessarily thought that would be the case, given very strong links. What's your reading on the situation?
Look, I don't think we have a credible off-ramp yet for the moment, and in this climate, even this was true before the war, but now with more certainty, we are in for a higher for longer period of time. Interest rates, inflation. So from a market's perspective, I think central banks have to be proactive in anchoring expectations in terms of where the prints are going to come and how what their monetary policy is going to look like. It's going to be messy for the markets, and there's going to be even a higher premium for liquidity from an investor's perspective, Karen.
Yeah, it's interesting where you've gone to in terms of central banks and what that could mean for risk on assets and for the safe havens, because the first central bank to move has been Australia today, very, very far from the action. In fact, you probably couldn't get even further away. But the reality is they were not as aggressive in tackling inflation in recent years. So they were hoping for some natural declines in that rate. It didn't happen now with international events. That's a message for other central banks, isn't it, about getting the house in order and getting that inflation rate lower so you can weather external shocks?
Absolutely. And I think the strong central banks and the more consequential central banks have to get ahead of the news cycle and acknowledge the fact that there is going to be a lag effect for all of this to filter through to the economy. I mean, now, this week we have the PPI numbers coming up, and I always try to look at the PPI numbers more than CPI numbers because it really shows where the baked-in inflation is. Whether the manufacturers pass on that inflation to the market or not is a different question. But there is no escape, right? I mean, and this was true before the war. So inflation is sticky. Liquidity is going to be at a premium. Long-term debt as an asset class was under heavy fire anyway. And this is going to have an impact on asset prices at some stage, sooner or later.
Everyone's having to make calculations and judgments and estimates on a very shifting picture, a very unclear picture. Will the war end in a couple of weeks, in a couple of months? Could it drag on longer? In terms of the decisions you're making, what's your estimate, and how are you making those calls?
Look, I mean, I think it's much of trying to understand what's going on the ground, which is why we are always on the ground and we have to be. But the reality is no one knows, and that in on its own is quite a nerve-wracking place to be. That's why, from our perspective, we look at the premium that we assign to liquidity, so availability of liquidity, money market funds, for example, but at the same time try to also bet on the innovation and which is the kind of longer term growth prospects. Anything that's in the middle, to me, anything that is mediocre to me is a loser, basically, a losing proposition.
Anything that would have been seen as potentially bringing that growth, let's say in the AI space, the data center build outs, the hyperscalers, the infrastructure, people have seen that. But with the energy prices now so much higher, the returns that were perhaps questionable before look even more uncertain. When will they start to reap a return on what they've put in?
So it's an interesting question, especially around AI and data centers and energy mix, because that's an area that we follow quite closely. Those are never meant to be short-term investments. And I think that thematically, the AI play, the fact that our life is going to be dominated by technology and AI is a continuous trend. Now, data centers are quite interesting. I mean, let's understand what happened within this war. When Iran hit 2 data centers, AWS data centers in Dubai, one in Bahrain, it shook the market to the core. Amazon has decided, for all intents and purposes, to exit the Middle East. So this just underlines the fact that resilience is also an asset, whether you're a government or a company. So the DC play, I think, is going to continue from an energy mix perspective, which has always been important. That's why nuclear, and especially the kind of longer-term technologies like small modular reactors and SMRs, are going to become more important. In any case, even at the best of times, for the hyperscalers to meet the demand, nuclear would have been an option. So I think so this war really effectively expedites the momentum that we already have had into its logical next phase.
So what, we are just over 2 weeks into this conflict as well now. When I read a lot of the big investment bank reports from some very well-respected economists, they say short term, if we can go back to some form of normality and the war were to end, the damage is limited. When does short term become medium term and medium term become a really, really big problem for everybody?
That's a great question, Steve. And given how important momentum is in trading and the markets, I think if this continues for another week or two maximum, then we have entered into the realm of this becoming a more medium-term reality. Now, by the way, let's also acknowledge the fact that even if the war miraculously stops today, what does it mean to go back to normality? The new normal is not what it used to be. And the genie is out of the lamp.
I don't know. I mean, I hear you, and I think it's probably fair to say that's top of the bell curve distribution idea. Sure. But let me just float something else. And again, I'm just asking this rather than saying I believe.
Sure.
Actually, could it be the end of such aggressive American adventurism, in which case actually we might be in a safer world? Look, the president has had some foreign policy successes over getting European allies to spend more on NATO, over the Venezuela situation, which the US oil majors potentially could benefit from as well. This has not been a success so far, despite what the administration says. This has not been a surgical strike to make regime change, to eliminate the longer-term threat from Iran as well. What if this actually blunts and dents American adventurism, and actually the world can be slightly calmer on a geopolitical front?
I mean, ultimately, I think it's always going to be about US versus China in the long term. And from your perspective, from what you just described, it's an interesting litmus test to give credit to your vantage point. It's an interesting litmus test to see if in this chaos, China decides to act in an aggressive manner. So far, they're not.
Well, I mean, yes, sorry.
And sorry, but at the end of so we'll see, to answer your question, I think we'll have to wait to see what that meeting with Xi Jinping is going to look like, which now looks like it's going to be delayed and postponed. It's very difficult to make a judgment call on whether this crisis and this war is going to meaningfully impact American foreign policy, because there isn't just a single American foreign policy, has never been. Mm-hmm. What I try to look at in understanding where we allocate assets and where we reinvest is very much around which asset classes do I really want to invest in, no matter what happens in this climate, because it's very difficult to judge. I mean, anyone that tells me that they know exactly what's going to happen, either on the positive or negative, I don't really buy into, because it's just it's chaotic.
So to your point around data centers and what you just flagged to us earlier about Amazon and its ambitions now in the Middle East because of the attack on its data centers, we know that the Middle East has been a massive buyer. The orders that came through last year were just simply enormous. And there was another layer on top of that demand story for the hyperscalers. But the attacks on the UAE and what it means for Saudi Arabia in terms of cloud services, whether they want to put all their eggs in the basket of connecting up the Gulf to this incredible technology. Do you think the ambitions change somewhat? Do they think if they cannot protect the infrastructure from drone attacks, then it's not worth the massive investment?
I'm not so sure if the strategy has changed. I think the investments on data centers will continue. Look, Gulf has done an admirable job in creating a market, a regional market, a global market, right? Now, this is its first real litmus test, and it is a test. And they learn quite fast, and I think they have a great decision-making capacity. So let's also acknowledge the fact that, yes, is this ideal? No, it's not. Are they reacting to it in a competent manner? They absolutely are. So I don't think the strategy will change. Now, if anything, I think they will look at hedging their defense apparatus to cater for a prospect of a prolonged conflict in the region, in the world. Is that a bad thing? I don't think so. I think it's quite a natural and a healthy thing. Exactly.
Key infrastructure. Exactly. And key infrastructure then is going to be these data centers.
Now, the one thing that I would watch out for, and again, in terms of the next step of a prospective escalation, which I hope it doesn't happen, is if Iran decides to hit desalination plants in the region. Which they have. There's been one, right? That's been impacted. But not in a meaningful manner. Because if I were in the Gulf region, I would look at trying to hedge and provide a protection mechanism towards how do I protect my critical infrastructure, not just oil and gas and energy, but also desalination plants. Again, taking a step back in the context of this chaos, what does it really mean for global markets, for US markets included? I do think that this is going to have, even if it ends today, a significant impact on the inflation numbers, and is less so the income effect, but more so the wealth effect that I would try to look at. Because the moment that people, public, US public included, realize that they may be getting poorer because of asset prices potentially, then that will change the narrative on the consumer side of things.
And the paper welfare one to watch.
Exactly.
Ozan, thank you so much for joining us. Ozan Ozkarel with us, co-founder and managing partner at Tanto Capital. Ahead on the show, the M&A saga continues as the German government pushes back on UniCredit's latest move on Commerzbank.